Alright, so let's try to create an income statement based off of this transaction analysis. And this transaction analysis is actually from the video called Transaction Analysis Main Example, and that's where these numbers are also from. All I've done is type them out so it's a little bit easier to see. So again, we're going to create an income statement. And keep in mind that all an income statement is revenues minus your expenses. So I'm just going to write revenue here. So that means we're only going to focus on these two lines right here, revenue and expenses. So we see that we have three different numbers here. This 4,200 is a consulting fee, the 1,600 is a consulting fee, and the 300 is rent revenue. So let's go ahead and write that down. So we'll start with the consulting fee. So we'll say that we have consulting revenue or fee, or whatever you want to call it, I'll just call it revenue, which comprises the 4,200 and the 1,600, and that equals 5,800. We also have rent revenue of 300, so I'll include that as well. So that's rent revenue, $300, which means that our total revenue is 6,100. Now let's also look at our expenses, because we have to subtract our expenses from our revenue in order to get net income. And for expenses, we have two right here. One is the rent expense that John paid out for the rent on the building that he uses as his consulting firm, and also the $700 in salary expense that he paid to his one employee. Alright, so let's write those down as well. So we have the rent expense of $1,000 and the salary expense of $700. So total expenses are $1,700, which means that our net income is $4,400. So again, this $4,400 is our net income, and this is how we prepare an income statement using this transaction analysis.